Yeah, so we will discuss about commodity trading because commodity trading is the let's say, in fact, the core. Someone want to record, okay? The core of almost every economic activities is based on commodity, and everything can be called commodity. At Lagos Commodity and Future Exchange, when I was there, there was argument we made with SEC. We enlisted to trade currency. I called the director of SEC then on phone. He told me that that they can't trade currency, blah blah blah. That is not allowed. They didn't allow it. Then I came back and met the operational manager. They said, but currency is a commodity that they want to trade it. Maybe naira and this France, the one of the currency that they used to buy in Cotonou. That
CFA.
yeah, CFA, yeah. So that currency is a commodity. So there are some legal definition you can put currency as a commodity, because everything can be known as commodity. Even we human beings can also be known as commodity. Like in the Western world, human beings are a big asset. It's a commodity. You can trade on it. Yeah, that's why you see a lot of whatever, including labor. They use human being for all of these things. It's a valuable thing to them. Now, that's where they can go and sort it out somewhere, bring them in and use them for maybe different kind of employment and stuff and grow the economy. Now, commodity can be anything because the whole world drives on commodity. When you make money in trading, you're most likely going to buy something. You can even buy a house, you can even buy a land. It's also a commodity, dependent. So it's a very big industry, and it drives the power of economy more than currency. So the commodity trading itself involves buying and selling of physical goods or raw materials. So anything like physical goods, even a car, you can equally call it commodity. Then, but in the trading industry, one of the major ones that is commonly available, which by definition of some certain capital market laws that have classified them as financial instrument, is like metals such as gold, silver, copper. We have energy like oil, like that's crude oil, not engine oil or olive oil or anything oil. No, like crude oil, natural gas, and we also have some agricultural products that's being classified under the asset, like wheat when it's in a large quantity, coffee, corn, and soya bean. So as I speak to you, I have about and then livestock is also part of commodity, like cattle. Some livestock. I think I don't know if chicken was listed. That was if there's an chain that has chicken. But the livestock is a commodity. It's a big one. Me, I have more than 20 acres of land, and I'm farming ginger there because ginger is very scarce in Nigeria, and it's something that will be listed on commodity exchange. So it's also a
Really?
product that's very quick. Yeah. I farm corn and ginger, and I trade them on exchange. So it's a short deal. Before I go into farming, I've already paid the money. So that's how it works. So if I'm going to get 5 billion per month, per year, it's already paid into the settlement account. I'm already 5 billion naira rich ahead of the year. So that's how it is. So that's why our teaching covers a lot, so that after it, you can decide to maybe navigate into any of these areas and start making money for yourself. Then, but we have major commodity exchange, such as New York Mercantile Exchange. We have Chicago Board of Trade. We have London Metal Exchange. We have Intercontinental Exchange, that's ICE. Then we have Chicago Mercantile Exchange, CME. Most of our trade is covered through Chicago Mercantile Exchange and board, C-board. And some of them, yeah, our trade covers New York Exchange, Chicago Exchange, and Seaboard. Then in Africa, we trade through Lagos and Commodity and Future Exchange. Then I also have a position I used to trade with Afex. I don't know if you know about Afex.
Afex.
Afex Exchange. Yeah, I've traded with them for more like 2 years, but sometimes I stopped making execution because I was there, my trade gained almost like 170 million. I don't just know what happened. So for a very long time, I've not done execution there. I used to trade maize on the exchange. So, but we're talking about the global exchange. However, all of this exchange now, the one available physical exchange we have, if you do your research, is only the London Metal Exchange. All of this exchange has gone digital. It's only London Metal Exchange that's physical. You can go in.
Okay.
Yeah, you can go in and open the office and see people. All of these people, if you go to their place now, it's like a meeting hall. You can book them for meeting, for conference and everything, because of technology has already disrupted the traditional way of trading. So they don't need to come to the trading floor again and trade. Yeah. So now we have how to trade commodities. There are different types of ways to trade it, but I only put only 4. There's other ones like such as swap. So I didn't put on all of them. And on this future contract, it is part of CFD. It is part of CFD. So one of the ways you can trade commodity is on future contract. That's agreement to buy or sell a commodity at the predetermined price at a specified time in the future, commonly used by producers and consumers to hedge against price inflation. Agreement to buy and sell. Let me use myself for example. There's a scarcity of ginger in the Nigeria, and I got information from somebody I trained. Say, because I'm a commodity trader, I have to sort for a buyer. We have an agreement to buy and sell ginger at a particular time. That agreement will be signed and settled through an exchange. Exchange will be the market where my own product will be listed. While we have already signed the agreement, this thing, I will deliver it in 9 months' time and will lock up the price. That price will lock up with the price that I'm going to be paid. So if at the end of the 9 months or 1 year time and the product is being settled and the price of ginger has gone up, the buyer has gained more. So if it has dropped, no problem. I have lost part of it because by the time I lock up the price has gone down below. So it's an agreement to deliver a particular product in the future. That's why I call future contract. So future contract is similar to CFD. That's why I didn't put CFD. CFD, the only difference between CFD and future is that CFD is not a deliverable. I mean, you can't deliver at all. But future, you can actually deliver the product. Instead of taking your settlement in cash, like profit in cash, you can take the product, because sometimes some of the people that come for future contract could be big companies. Let's say those companies let's say Dangote that produces oil may come to an exchange and have a contract directly. There's a company that produces is it Unilever? They're in Ikeja, Lagos. They produce all this cornflakes, gala, something. So they used to come to exchange. They're one of the biggest buyers of corn. So that kind of company won't delivery.
Is it UAC?
Sorry?
I said, is it UAC?
No. It says
Unilever. It's Unilever.
I don't know the name. I don't know what it's called. There's a company that I used to buy at the exchange very well. They buy corn. All these cornflakes, those things, they use corn to produce. A lot of things they use that corn that maize to produce. A lot of them. All this food, them. You know, I think baby food, dog food, different types of things.
That is Nestle.
Sorry?
I'm thinking if it's Nestle.
Yeah, it could be Nestle, probably. They're in Ikeja. Yeah, it's a big company. So now that company now could also be referred as an exchange trader. And their own pattern of trading is that they will need the delivery of the product because they use it to produce other things. While some of us who trade to buy and sell does not even need the product. We only need the cash settlement. There was a time my maize gained 370% within 5 days. I don't need the maize. If you send it to me, what will I use it to do? So what I did is to place a withdrawal and they pay my money in cash. That is future contract. So those companies can come in and meet and have a deal with a dealing desk member, which is also a broker who trade through an exchange. and they now lock up a price and set up delivering date, they will see the date that contract will be expired. Once the contract is expired, it means the deal is closed. Then they will now take a delivery through the delivery and settlement bank and whatever. They do all the paperwork and the company will take their delivery. That is future contract. But on CFD, it means that it can only be done only in cash. That is the only difference, the major difference. Both futures and CFD can be done on leverage. So there's not much difference on that. So you can use it on leverage. And then now you can trade future contract on agricultural product, oil and gas, even cryptocurrency now, some future contract on it and CFD on it. And you could trade it on any financial instrument. Then we have option, which is a contract that gives the right the right but not the obligation to buy or sell a commodity at a specific price before a certain date. So it's used for hedging. Option is not the same to binary option. This is the proper option how you trade. Most of our traders in the US, they trade more of option because option is very common with the many boys in the US. Yeah, so now they will lock up a price and lock up a time. They will lock up a price, lock up a time. Time is more important to on option trading than futures. And option traders does not really have time to take delivery, or they don't take delivery of that product. It's only cash settlement. In Nigeria, it's not really common. It's not much. People doesn't trade option more. So if you even talk about option, some people don't understand what I'm talking about. It's only forex and commodities that they know. They don't know about option. Then another type of commodity you can trade is spot. So spot is common. Spot is like buying and selling on commodity for immediate delivery. Like you come to a phone store, you ask them for price of iPhone, and you will agree on the price, you pay the money, they say give you your phone. So that is spot. So now this spot is the way it is also being done on exchange. You buy a product at a particular price and it delivered to you. Like the gold futures we trade on exchange is basically a spot contract, not only not on future, because there's no a buyer and a seller on the future, on the spot. So we buy it at that price, and it is locked in the bank vault where the custodian is holding it. Because if we take the delivery of it, if you want to sell it back at exchange, it has to go through another quality assessment, whatever, certification and all of that, before you can bring it back to the exchange for enlisting. So you have to put it at the bank vault. As the price of gold is rising, or the price of all of them is rising, and we hold our contract note. Now that's on spot. You buy it at a spot. Then we have ETF. ETF is in Nigeria. It's common in Nigeria. It's exchange traded fund that track the price of a specific commodity or commodity index. So now look at how it works. So this ETF is more of paper trading. It's a provide a way to invest in commodities without physical ownership. Yeah, so it's like paper trading. You're not owning it, but you own it on paper. So it's like you're trading the stock of commodities. I don't know whether you get the difference. You're trading the stock of that commodity. They do the paper, like it's mostly common at the stock exchange, the ETF. It's not really common at the commodity exchange. Those that trade on stock, like in the New York stock market, they listed Bitcoin as a stock. So that Bitcoin now, if you buy it there, it's not on spot, it's not on future, it's only on ETF. It's Bitcoin paper, but they value the price of that Bitcoin ETF to the same price of Bitcoin directly. So people who trade on Bitcoin they're actually trading Bitcoin ETF. Like we also have gold ETF and a lot of ETF products. So this is a man-made. It's something that is being created by security dealers and approved by regulators. So now from there, you could be able to like own that product as a stock value. As the value of that stock goes up, you make profit. As the price comes down, of course, you lose money. That is ETF trading. Then there are factors that affect commodity market. One of them is demand and supply. We will discuss that when we go into oil. We have geopolitical event. We have weather condition. We have economic indicator. Geopolitical events like political instability, I would say, let's say war would be a political event, yeah. Some things that can cause by human factors. Yeah. So it can affect the price of commodity. Then, for example, in Nigeria, the food is high in Nigeria, not because of bad government, not just because of bad government. What caused it was political instability in the Northeast, where the commodities are produced more. It has affected farmers and affected a lot of people. They're not easily to produce more, and that is one of the reasons I think why ginger becomes scarce. Because I think Benue or George was one of the biggest producer. Some of them are not producing again. Now these days, the ginger buyers have even like going ahead and they're looking for where to get. And in the whole world, it's only Nigeria, China, and India that produces the highest number of ginger. So now, political event can affect the price to go up. Then weather condition where there's some certain natural disaster can also affect the price. For example, there was a time that there was this natural disaster in the United States. This natural that used to caused by rain. What's the name of that thing? Heavy rain with the wind. The name is called.
Tornado.
Yeah, something like tornado happen more of China and
Or hurricane.
Hurricane. So that hurricane something happened last time about 10, and it affected about 10 refineries, I think, in the United States. Oil price went up. That's weather condition. Of course, economic indication shows that interest rate, which is on Forex last week, interest rate and inflation rate and other things can affect it. So strong economic growth can increase demand for raw materials. So when there is strong economic growth, it can increase more demand. So, for example, on oil price often react to Middle East political tension. For example, one that tension in Middle East, the price of oil will react very quick, because I think Middle East is one of the major oil producing zone we have. And now these are the products that can affect commodities very much. Then there are many advantages of trading on commodity. One, it can use it to diversify. It can use it to hedge against inflation. It has the potential for high return. That's also why sometimes it's regulated, because it's a big deal that runs into billions of dollars and millions of dollars. And it has more liquidity and more volatility. And so which creates room for more investment opportunities, because that's what investors are looking for. I remember in our office in Ikoyi, one man came in, he told me he was a stock broker. He want to know whether he can push some of his investor to online trading, and that I asked him why. He said that some of them prefer it because it's more volatile. So investors want where they will place a trade and see the outcome, whether it's profit or loss, quick, so they can make a right decision. Not where they will place a trade 1 year, it is still at the same price. You don't understand? So because if it's still at the same price, the same way, it means there's no liquidity. It means there's no activity, no money coming into that sector. So in commodity market, there's high liquidity in it. And the commodity often retain value during inflationary period. For example, gold. Gold is commonly used to hedge against inflation. For example, during the pandemic, it's only gold that did not fall. Gold get to $2,080 for the first time. Gold keep rising, but other stock fall because the bigger companies were moving all the assets in gold, because gold is used for hedging. If we navigate to costs of gold, you see that gold is only used for hedging against inflation, and gold never fall in price easily. Gold is always high, because that is what the world used for hedging since 1970s. They did the France president came up with monetary policy on making cash more available for every sort of business instead of using gold. So money become the major medium of exchange for goods. So now gold went back, become a hedge, what they used to hedge them against it. Now, this is the advantage of trading on commodities. So now, like I know since over 2 years now, many people who knows the terrain of investment move all their money from the Nigeria to gold, and through CBN, not even through an exchange, through CBN. I know some ladies, they move all their money to gold, and it is stored with CBN. So anytime they want to do anything, they will sell some part of it to CBN and get their money. Some people move their own money in dollar because that's what they have access to. So anytime they want to make any trade, they do exchange back to dollar. Then there are some risks in trading commodity, which is high volatility. I told you before, volatility serves in both ways. If it's volatile, it can come in your favor, it can go against your favor because of it can go up, it can come down, which is what makes the business more attractive because of volatility. So it's in both ways. If it's not volatile, it's not going to move. Then risk of leverage, both commodity and future and forex or whatever, you can use leverage to boost your trade, unless if you're on spot. If you're on spot market, most spot market or spot exchange does not necessarily need leverage. You just only your money, you use it to buy the contract and that's all. So leverage in spot market could be like loan, which is impossible for a bank to give you loan to trade on commodities. They don't loan, even insurance company does not even insure it. So, but they can get a loan somewhere if it's possible for you to buy more of commodity. But now you also stand on the chance of volatility risk, assuming you buy that commodity and the price dropped. So you sell it, you may not make profit to pay back your loan. So that is the risk. But if you buy the commodity and the price goes up and you sell it, you make more money and pay back your loan. Loan, it could be like a leverage in the trading space. Then market speculation. So price is also highly speculated in commodity, but not as it is speculated in forex. One, forex trading is highly speculated to 92% or 90%. You can Google it online because everybody plays role in financial market. Everybody, even those who are not trading, they have cash. As long as you have money in your pocket, you're a forex trader. The value of that money fluctuates daily. So everybody has that commodity with them. But not everybody have commodity as asset. Not everybody. So speculation is low because commodity is controlled by dealers like the cartels. When you talk of gold and oil, there are people in charge of that sector. It's not everybody can make a decision on it. So the speculation nature of it is low than the speculative nature of it in forex. Then we have regulatory risk. Changing regulation can impact trading conditions. Example, environmental regulation affect energy commodities. So there are some regulators, a lot of people who trade with us, some of them can't even verify the account. It's not our fault. It's not the fault of the brokers. It's fault of regulation. Regulation make it a little bit complex. Some who verify can easily fund. It's not their fault. Broker want to receive your money. That's the truth. But some regulators put some certain things digitally, make it difficult. And how it works, most of these guys are not the one verifying you. That's the truth. People you're chatting, the broker you're calling are not the one. It's even a third party that has access to verify you. When they verify you, they send it to the broker. The broker will not start onboarding. That's why when you do a course on regulatory structure on the financial market, you see, wow, there are a lot of body that is behind what you're saying, what you're seeing. A lot of people, a lot of parties behind. Even some payments you're making, it doesn't go to your broker first. It goes to another PSP. And PSP may be the one to send it to settlement bank. There are a lot of regulatory services applied to it, which poses risk to the business. So that's why sometimes when you're trading, any country you choose, you have to try to check the regulatory risk attached to that particular country, because regulator can make you lose money. It can also make you gain money. They can put a risk, something or a law or a rule that could affect your position in the market. I don't know why it's like that, but they may think some people like it, some people doesn't like it. Now, how to get started on commodity trading is that you will choose a commodity broker. You open a trading account. Now, this commodity broker, let me emphasize something on it. Not every broker is a commodity broker, or not every broker is suitable for your strategy. Not all. You need to know the type of broker you are using to know whether it fits into what you are doing. Then, of course, you open an account, you make your research and analysis, then you develop a trading plan. That trading plan is what guarantees your success, how you trade and how you want to carry out your trading. Now, that is the end about overview of the commodity market. So I will move to, we will use, if you have a question, you can ask me now because I'm changing my slide to another one, or why I'm changing it. So this commodity market now, what are the things are we going to trade? If you raise your hand, I would like you to talk. So we move down to, we first of all start with oil and gas. I will show you how to trade oil. Some things you need to know about oil. If you have a question, you can ask me. Yeah. So now from here, we can move down to crude oil trading, which is part of the commodities. We will talk about gold as well, if time permits us. If time permits us, we will talk about gold and silver and treasuries and other things in the coming days. Some of you, your class is one month. That's why I'm rushing it. I'm so sorry. It's 1 month. Those who are on 6 months, I don't have a problem with you. We can always even repeat the class more, in fact, more than 10 times. So now, because no one wants to ask a question. I hope you're not sleeping. So, based on what you have discussed now, crude oil is one of the things to trade in the commodity market. It's one of the major asset class, crude oil and gold. If you must have heard about trading, blah, 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 you see that crude oil is always there. Gold is always there. In fact, if you see some brokers making an advertisement, once they put forward, they put commodities. Those commodities, if you open commodity market, the top chart is always oil and gold. Before you come to other agro commodities like soybean, coffee, and all of that. In fact, if you even make some ad on coffee trading, whatever, I don't think it may catch attention of people. It's always on oil. Why? Because it is one of the best commodity to trade so far. Let me know who can trade oil futures. Okay, let me start from here. Yeah. Let me start from this place about crude oil. It is one of the best commodity so far with very active investors. Oil, because of the price of oil affect the price of both gold. Let me use my slide properly. The price of crude oil affect the price of currency. The currency we are trading, the price affect it. It affect the price of gold, stocks, and other instruments in the whole world. Because of oil is still remains is the major source of energy globally. Now, there's always news, fundamentals of oil. You could always get it, try to know what is happening. Sometimes when you listen to your local radio station and TV station, you see them casting news on oil. Even though they know that the locals are not trading on it, but they always bring the news to you, telling you where the price of oil starts, where the price of oil closes. Now, those who trade oil are rich people. You will agree to that. No anybody who trade oil, mostly big guys. Whether you trade on spot and whatever, it's the same price. It's different. In fact, many sports oil traders who take delivery doesn't want it again because of the time you will spend with your vessels to deliver it to the container, everything, the whole thing now. At the end of the day, tax and everything, we take almost all the profit now. Why? What give you profit is the price that you guys agree to buy and sell. But the logistic part of it, where you're making delivery to that product, licensing and everything, is taking on very much time and much resources. At the end, they may deliver it and make 10% profit. Why, if they go to the exchange, make that execution the same price, and you deliver it and the price will go up, they make more profit for themselves. Because the price of crude oil is very much active and it goes fast and it goes up daily. Now, who can trade oil futures? You and I can trade it. A company can trade it, or a trading firm can also trade it. A trading firm could be like brokers, all these big companies or asset management companies and all of that, investment bankers, they can trade it. Now, professionals, they hedge, professionals and hedgers hedge the energy market with industry players taking position to offset physical exposure. Why hedge funds and retailers such as me and you trade on a long and a short-term direction. So we can trade oil on a short time. We can trade it on a long time based on the strategy we are using. Some people prefer short-term movement on oil, maybe daily or weekly. Some people prefer you to trade on a long time movement, and it's mostly hedge fund managers and individual traders. Then, how big is oil? Only in 2022, the world produced an average 80.75 million barrels of oil per day. Now, it put it to annual production cost around 29.5 billion barrels, with the market size exceeding 2 trillion at the current price. So I made this note around 2023. This is 2024. Now, there are factors that affect oil. One of them is demand and supply. Another one is politics. The other one is natural disaster. On forex, I give you 10. 10 is not only factor, so you reach up to 20. But I give you 10 top factors that affect the price of oil. Sorry, that affect the price of currency. But in oil, I'm giving you only 3. There are other things, but 3, the most important factor that affect oil is only 3. Demand and supply, politics, and natural disaster. I will emphasize more on this demand and supply. This is 132. Let me know how we'll go on break. Okay, we'll go on break by 2. Then we'll come back with trade by 3:30. Okay, so I will emphasize more on the demand and supply, politics, and natural disaster. This is, if you know these things now, you have known fundamentals of oil. Then I will make it more practical, because I will go off the slide and show you on internet. Then the oil futures, I will have discussed about it before on the overview of the fundamental. You can trade it on futures, you can trade it on spot contracts. Now, check this my note here. I say futures contract is similar with derivative contracts because they mostly don't take delivery. So some of what trade on derivative is the same price. Now, future contract and derivative is done through an exchange or a dealer. They are all the same people. But major market now are derivative nature because everything now is digital. So the price of whatever thing you're trading now is derived on something. Or the whole world now is on derivative. And then what is even derivative? It's trading a financial instrument or price of financial instrument that is derived, that is its value is derived on something. So it's not like virtual asset that does not have any asset where the price is derived from. For example, look at how to give you a clear picture of derivative. You go to e-commerce website, let's say GG, I think GG is an e-commerce website, gg.com. You could see the price of oil, a car. A dealer posted a car and you put a price there. Then you probably see a picture of the car. That is digital. You're not seeing that car physically, you're seeing the picture of it and see a price that is attached to it. So what it means that price you see there is derived from the physical car that is parked somewhere. The car dealer place may be in Lagos, maybe somewhere, anywhere. It could even be in the north, but you could see the price online. So if the price of that car changes, you will come back to the GG website and update the current price there. So what you're seeing there is the price of car in a derivative form. It shows you that this is this price of car, and it's actually a physical product that I park in my garage somewhere. If you come in there, you could see it physically. If you come to my garage, you could see the car. And anytime you want to buy the car, probably you have paid for the car. He may give you address of where he is. When you go there, you see that car. You see exactly that car and everything. So, oh, this is the picture I saw online. So that is derivative. So now, if you're trading on stock or whatever, if you're trading on future or commodity market or on CFD, the price of CFD is derived from something, a physical asset that is being listed somewhere. And you make profit as the price of that asset goes up or down. Then you make profit. And again, your settlement is paid in cash. That's why it's called CFD, contract for difference. There are different contracts between the buying, the opening price and closing price is different. Is a CFD value you're trading. Let's say now you buy it at a low price and the price appreciates to and close at a higher price where you bought it. You have made profit. Then you bought at a certain price, and the price goes down, close below where you bought it, you have lost money. The same way normal business is. If you buy a goose, let's say you buy a phone at 100,000 naira and you want to sell it, discover that the price of phone now is 80,000. Obviously, you have lost money because nobody will agree to buy the phone from you at 100,000. So you have to look for another price to sell, or you hold on until the price of phone come back to 100,000. Then you can sell it at the same price you bought it, or you hold on, it can move to 110, 105,000. Then you now sell it and make profit. That is similar thing with derivative. But on derivative, you have to do it through a dealer who issue you the contract. It could be a broker, or it could be an investment dealer. Then it could be an OTC dealer that is giving you through over-the-counter derivative. But futures are not over-the-counter. Futures are mostly done through an exchange. So an exchange is a central market where a buyer and a seller meet each other. Then you place a trade, then a trader, an exchange takes their commission. A similar thing with in the crypto market now, we have an exchange that is very common, which is Binance. Binance is a crypto exchange that a buyer and a seller will meet. Those that does B2P, it's like similar to with an exchange system where the Binance itself serves as exchange. They take commission from both parties and match both parties together to transact. Then they look as if they are now like the middleman who regulate it outside the upper regulator from government. If you have a question, then you can be listing, you can be writing them down. Then we have price of crude oil, type of crude oil, which is the most common one is WTI crude. We have Brent crude, which is very common with trade. We have a lot of crude oil, but they're mostly grouped into these two. There's also other type of crude oil. Is it no bank crude? But if you check some most brokerage websites or platform or money exchange, you will see Brent crude oil or WTI crude. Because even the Dubai oil I think is listed under WTI, I think, because Dubai oil, I think is light crude. It's under this, but our own crude is under Brent. Because, we have our burning light I think it's under Brent. Then if you want to trade oil, it is one of the benefits of trading oil is that oil is a physical commodity. It's a physical one. Then it's easy to make gain, and it's also easy to predict the price. Easy to determine the quantity of supply and demand. Take note of this first one. Easy to know the quantity available to the whole world. Then the price is also regulated. Understand this one now. Of course, access can be done through an exchange. You see this one, the price is regulated globally. It means the government knows the price they want to buy. They want the price to be either at a lower price. I also know the price they want the price to be at a higher price. So why won't you make profits as a trader? Because they have the people that regulate it are government, such as OPEC. They already every year they tell you what they want as benchmark, as a body. They will tell you what they want as production cost or how much they will produce. And they will also give you reports every month or every week how much that is available. So I know very well that this is the price they want it. So they regulate it to make sure that people will not over supply the market. They also doesn't want it to like go up to some certain level where a buyer cannot afford it, so that it will not cause crisis in the world. But if oil is too much, if price of oil is too costly in the world, because it's the major source of energy, and the oil affect other things, the whole world will be on inflation. So they want to make sure that everything is balanced. So it's easy for me to know that this price is gonna go down here and go up here, because it's regulated. I follow what the regulator wants it to be. Then I trade according to the price. Then it's very much easy to make money. Then it's also something that is very, very common. You can see quantity of it available. Remember, it has volatility. It has very much volatility, so it can always move. In forest, this advantage may not be in forest, because it's difficult to know, even if you want to use trade balance to determine demand supply, it's not that common. Then, of course, even the price of regulation, it's not really common easily for you to know it as quick as possible, because of the nature of forest trading. And nature of forest trading, most important, because the forests are traded in pairs. It's in pair, one country against another one. you're not trading against anything. So a commodity is either it's going up or it's coming down. It's as simple as that. It's like when you have gold. Gold is good. You're not trying to equate with anything. You can only say, okay, my gold, let me use the dollar to determine the value, or let me use naira or pound to determine the value. But gold is good. Is that either it's going up or it's coming down. It's not where it's going up today, and that currency come and counter it. No, because it's not a currency. It's not paired with anything. It's not struggling with anything at all. It's on its own. That's commodity for you. It's either it's going up or it's coming down. And the price is highly regulated. Now, there are people who place in the industry. I've said about this before. We have derivative and futures people, which is the exchange. We have liquidity providers. We have hedge funds. We have private firm individuals, brokers, and investment bankers. I think we fall here. Some of us fall here. Yeah, I don't know if I'm teaching any company here. We fall under here. But the people who pull up big money in this market are investment bankers, liquidity providers, hedge fund, and possibly private firm, because they have a lot of money. They can pump in big amount of money. And now this is how order is executed on commodity market. Even in forex, this here investor stand as a trader. So when you place your order, it goes to a brokerage platform, and that brokerage will have a liquidity or a dealer or an exchange. A dealer is person that buy off your orders. Liquidity, of course, is also the same thing with a dealer who provide capital. Liquidity. Somebody asks one day, the money I'm making, who am I making that money from? The money I'm losing, who am I losing to? So when you trade and lose money, you lose to liquidity. When you trade and get money, you gain from liquidity. That's why if you check some people, some brokers will enlist their liquidity assets. The broker will have over, is it $5 trillion liquidity assets? Because of many of the brokers use aggregated liquidities to have more liquidity. So if you are coming into the market, you have maybe $1,000 to trade, and liquidity is there for you to trade $1 million, maybe $1 trillion. You see that you have enough money to trade again. So it's ability for you to make as much money as possible. Most people try to consider liquidity to know to trade where there's liquidity. So people lose more money or have issue if liquidity doesn't have enough money to pay you, and you make more profit than they can pay. It's a problem. That's why a regulated market must have more liquidity than what the traders are trading with. So brokers have to walk through what is called aggregation of liquidities, connecting the server or the platform with so many liquidities so that they can have more money any of their trader can trade. At the same time, some of the brokers, when you are placing a trade, they try to push those order to different liquidities, like try to not to put all their eggs in one basket, like all their orders. So they connect those orders to different liquidities. And so when you make money, people who are losing money are liquidities. And this liquidity can also be a bank. You call them forest bank. They're not like regular bank where you make deposit. Like, I don't know how many of you know about George Soros. George Soros, Google about him. He was the man that broke the Bank of England in 1992. Because the crisis of Britain pound was much, and he sold Britain pound and make a lot of money that the bank cannot pay. So it means he made more money than what they provided to him as liquidity. Then they have to sign a deal with him. He owned a stake with the bank. I think today he's still making money. I think the man is still alive. So go and Google about him. That's liquidity or a dealer. Then an exchange is not a liquidity. A liquidity exchange come in here when it has to do with futures or spot, then an exchange can be around. This is where to make execution. But on this exchange, there will also be a market maker who offset all the transactions by himself, who also a member of the exchange that offset no matter any time you want to buy. Have you not discovered that anytime you want to sell your stock, no matter the price of that stock, somebody will buy the stock? That's liquidity or market maker who kind of offset it by any price, whether the stock price is low or high, they will buy it. So now you have lost your stock, the price is low, and somebody is willing to buy it. How is that person making money? You may not know. It's just because he's the one that provided liquidity. He can always buy a stock at any price. They know how they can manage their risk, and they make their own money. Then I don't think you need this information. Okay, this information was in 2023. We're talking about how profitable oil contract is. And it's a research I did by myself from Yahoo Finance and the CME, Chicago Exchange. From my second paragraph, you see that in 2023, there was 1 million contracts of WTI. But this 2024, there's 550 million contracts available that ended on May, from 1 million to 50 million. So oil has the highest demand this year. They say for the past under a decade, it has not gotten that kind of demand. We have over 50 million contracts already in oil. That was one of the reasons why we believe that oil may close at a higher price this year. And as of 2023, the brokers made an expected growth of $435.93 billion in 2022. And in 2023, they made about $469 billion like revenue in oil, which is about 7% growth. Then this is the kind of profit the big companies are making on it. Then it didn't capture the one of individuals. Then we have a crude oil contract. We have profit and risk. Like crude oil contracts are believed to be less risky than equity or stock market, because you will need a unit of your deposit to place the trade on oil. Then let me show you how it works. When you check the price of crude oil, you see this price here. This is $83.10. Then this cent here is where you make the profit, not the $83. Now, if the price of oil move from this $83.10 to $85.10, that is $2. And you are holding a contract of okay, and you're holding a contract of $500. That day you have made $200,000 profit. That day. I mean, for oil to gain only $2 in value, and you have a contract of $500, their profit that day is $100,000. And it's very common that oil can go $2 profit in a day, $3 profit in a day, $1 profit in a day. And you have a contract of $500. Then if you have a contract of $10 or $1, you have made $200 from the oil in that day. You have a contract of maybe $10, you multiply $10 times 200, because this cent here is how the profit is measured. That's why when you see them talking about oil price, they will always mention the cent, not the major figure, because it takes about 99 cents to get an additional $1. So each of these cents count on the profit making and the oil market. Then how to get started? Access to commodity. We're talking about you have to have a commodity account and stuff like that. Now let's go into demand and supply. How do you know about the factors of demand and supply in oil? Yeah, I told you I emphasize on it. Now on this demand and supply, once every week we have two types of bodies that send us information on oil based on demand and supply. Now, this body is called EIA, Energy Information Administration, and another body is called API, American Petroleum Institute. They are the one responsible in supplying us information about demand and supply level of oil. I'm opening a different slide, so just pardon me. I'm going live on the internet. This class is so bad because it's not practical. Are you sure you guys are not sleeping?
We are with you, sir.
So we are very attentive to what you're saying.
Very. hear you.
Okay, thank you for hearing your voice. Yeah. Yeah. So now, no matter what I have said, if you didn't practicalize it, it will be difficult for you to understand it. There are two bodies that send us report about oil. One of them is U.S. Energy Information Administration, EIA. Another one is this one, API, American Petroleum Institute. So once every week, they send us this report. What is the report all about? They will tell us the quantity of oil available for sale or for trade globally. How are they getting this report? On the side of EIA, all the oil companies in the whole world, we send them a report of total quantity of oil available they have for trading, not the one in the reserve. Then the forecast websites such as Forest Pattern and FS Street, investing.com will now get this report and send it to us and like publish it for traders. We can use this thing to know the quantity of demand and quantity of supply. Like today is inventory report. It's called, of course, it's called crude inventory. That's report, like the stock report. It's called inventory, taking inventory of the product. The EIA will release, they release this report every Wednesday by 3:30 p.m. GMT. The API, their own report comes out every Tuesday by 9 p.m. Yeah, by 9 p.m. in the night. And the forest factory itself is also connected to EIA reports. For example, let me go to today, which is Wednesday. This is forest factory. Then you could see that here, you see that there's an arrow here, that's 3:30. It's showing you the next time the report will be out. Now, this report is the EIA report. It's called crude oil inventory. If you click here, you see it's coming from Energy Information Administration. If I click on it, it will also take me to the EIA website. So showing that they are all connected, they are the same. So the forest factory is not independent. They will take reports from other source. And now, but the advantage of them is that because of time zones, it's easy to use the forest factory to know the actual time this report are going to come out. I'll set up my own time to reflect the time where I am. This is 1:43. As you can see here, it's 1:43. So if you change your time zone or where you are, if it's not the same time zone, it will change. It will give you a different time. This 3:30 could be, I think, 10:30 in the US time. I think in the New York time, it's 10:30 there. Now, this report is what the major oil traders use to measure the demand and supply level. It's different from politics or other stuff. Now, as you can see now, the analyst is expecting about minus 1.2 million, like a decrease in supply. And the previous one was 1.2 million barrel. Now, let me ask you a question. Here was, okay, from here was, that's May 22nd, here was 1.8 million barrel, but May 30th was minus 4.2 million barrel. And here, June 5th was 1.2 million barrel. What happened here based on demand and supply level? I mean, this three here, here, and here. Can someone please explain to me? Probably you're not following me. Who's following me, please?
Oh, okay, sir. I will say there's a serious decrease.
Where?
That's from let's start from June. Okay, from May to June. Yeah, from May to June.
So on May 15th, okay, from on May 8th, that was minus 1.4 million barrel. On May 15th, that was minus 2.5 million barrel. On May 22nd, that was 1.8 million. It means addition, I think. Then on May 30th, that was minus 4.2 million barrel. Then on May 5th, that was 1.2 million barrel. Now, this is a report about quantities of oil available. And when you click here, latest release, here, you will see the current latest release from EIA. For example, if you read here, can you just please kind of read on this place? Can you please?
So just say we should read it.
Yeah, please.
U.S. commercial crude oil inventories, in brackets, excluding those in the strategic petroleum reserve, increased by 1.2 million barrels from the previous week.
Now, what do you understand?
Okay, I would say there's 1.2 increment. Something like.
Yeah. There was 1.2 million increase.
From the
Now,
previous.
now, so when you check here, you see that they say excluded or excluding those in the reserve. So it means it's not all of them. Is the only one available for trading that was released. Of course, when you go down here, you see a lot of reports about gasoline and all that. But crude oil is a major one that controls almost all of their prices. And that was why you come in here, you see that it's 1.2 million barrel. And they were expecting that there should be shortage, and there wasn't shortage. There was more of addition. This is how to know the supply level of oil per week. Now, when you come in today, like today, we see like increase of 5 million today. By next week, we saw increase of 7 million. By the third week, we saw increase of 10 million. What's happening in the market? Can someone answer me, please?
Okay, so I would say it's going high. It's going high. There is a pressure in demand level, and the price is moving up.
Perfect. And the price of oil will start falling from here. And you see it on the news that they're supplying so much oil, and the price will start falling. Because it's demand and supply that control the price, demand and supply, and all those policies and natural disaster. Now, today is the EIA report. Okay. Let me show you something.
Sir, please don't be offended. I don't know. Can you come again, sir? In the explanation of the demand, in the demand and supply of oil, sir.
I'll show you.
Okay, sir.
I like to use investing. Yeah, investing. Now, I said that today is another AIA report on crude oil. It talked about, it will give us the current release of the quantity of oil available this week. Now, last week was 1.2 million. By 3:30 p.m., they'll give us another release, and they're expecting that there should be minus 1.2 million. Here, the forecast, what they're expecting is that there will be minus 1.2 million. But exactly by 3:30 p.m., that will be the latest report we come out here. So, for example, now, if the report become minus 4 million, minus 3 million, it's even be more than what they expected. And the price of oil will go up, or most likely going to go up. But now, when we have decrease, it means that probably kind of, increase like no minus, like more supply. It means that it is below the expectation, then the price of oil will fall, or let's say most likely fall. Do you understand the analysis? When there are more supply in the market, the price of oil will most likely fall, then you sell. When there are less supply in the market, the price of oil will most likely rise, then you buy.
Okay, sir, let me understand something. Like, let me use the case of June. This June data. That place they say this June data, they say 1.2 million, and they forecasted minus 2.1. Does it mean that if the actual now is now greater than the forecast, the value will fall?
Will fall. Yeah. And look at it here. That was what happened. The market came down last week.
Okay.
Now, there are other factors that affect it. I told you, but we're talking about demand and supply here. Now, how to know the quantity. Now, this is the API report. It came out last night. It was minus 2.4 million barrel. And they forecasted minus 1.7 million. But what came out last night, which is June 11 here, is please make sure you understand this. I'm showing you people. Please, I'm just begging you. Because if you don't know these things, you can't make proper analysis. Because all is different by fundamentals, more than technical. So last night was minus 2.4 million barrel, which is the 11th of June. This is internet, it's not a slide. This is current website. If you put it on your system, you see the same thing I'm seeing there. Well, the forecast, expectation was 1.7. So it is not better than what they expected, which that's why it is also on green. Now, if you can read this thing now, I don't know who will have time to read it for me.
Okay, sir. Let me.
The American Institute.
Sorry?
The American Petroleum Institute reports inventory levels of U.S. crude oil, petrol. Can you hear me?
Yeah, okay.
And oscillate stocks on a weekly basis. The figure shows how much oil and refined products are available in storage. The indicator gives an overview of U.S. petroleum demand. If the increase in crude inventories is more than expected, it implies weaker demand and is bearish for crude prices.
Yes.
The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and is bullish for crude prices.
Bad.
The same can be said if a decline in inventories is more than expected.
So, what do you understand on that by that statement? Like the second line, second paragraph. Kind of, if the increase is more than what expected, the increase means the supply is more. It means that it can trigger weaker demand, mean that the demand of oil will reduce and the price will fall, which is bearish. So now, the same can be said even when the increase is lesser than the expected, which is like shortage decrease. So if it's lesser than what they're expecting, it will imply more demand, because once there are less supply, it will trigger people to buy more. During the pandemic, oil fell because of oil company keep producing and people were no more buying because almost economic activity we are on shutdown. And those oil rig cannot stop drilling. They say once they stop that the oil rig will block. So they have to keep pumping. They say until the point, even China, so many countries run out of oil reserve storage. All their storage was full. The price of oil came down to $5. I made a video that time asking people to start buying now because it's a volatile asset to go up. The oil price later within 24 months get to $127 within 24 months. Then went up because that $5 was below risk level. What are you going to lose again? In fact, some exchange was trading about to -5. I mean, it came down to zero. Nothing was remaining again in the oil price. And so people who bought there bought almost at zero price, like free. Now the price of oil now is now 120. It got to 120 something before it came down to where it is now. Now that is all about power of supply and demand. So how do we know that the price that the supply is much? How do we know that the supply is not much? It's through API and AIA. Then how do we get the API result report? How do we get the AIA result? You can get it through Forest Factory using the time factor, or go to the AIA website and get it. And once we get it, where we look out for is here. And when is the report coming out? It comes out every Wednesday by 3:30 p.m. But when there are holidays, it can come out on Thursday on a different time. Do you understand? Now, the same thing apply when we talk about politics, which is fundamentals news. In the politics of oil, we'll talk about news affecting oil, such as war, like the issue in the Middle East can affect the price of oil. Then we have, like you see, OPEC, the OPEC community. Last 2 weeks, OPEC said that they will cut production till 2025, meaning that they still want to maintain the price to be up. Because if price of oil is up, it's good for many OPEC communities because they're making money. They're selling oil, the price of oil at a higher price. You see, oilprice.com. Sometimes you can get news, breaking news of what is happening, what happened in the oil. Even today that EIA report is coming out, it will also come out here. They also flash the news that there's inventory drop or there's inventory build, and they will tell you what the price is talking about. So when there is a report on OPEC or on the Middle East, that's for a metal of oil. So the report is always somewhere you can go and find it. It's not as vast as they see in the forest, where everybody can, you know what I mean? Yeah, so these are commodities that has a control sect that controls the price. So if you go in there, you go and get their news, know what is happening. As a matter of fact, it may even be a middle, like some association that can belong to both online and whatever, Middle East, whatever, so many deals, even on so many websites that will give you the tips, inner tips about oil when something is going to happen in the oil price. For example, now look at the current news. They say is OPEC too bullish on China's oil demand. They said China oil demand growth is projected to slow after a record year of import. raising questions about its impact on global oil price and demand forecast. Why? China is one of the major buyers of oil. China, India, and the United States. They're one of the major buyers of oil. So anytime they are buying, or they say they are not buying oil, the price of oil may drop. Or when they have more demand of oil, the price of oil goes up. Now today, the price of oil has gone up to $1.18. That is Brent crude. And so that is WTI crude. Brent crude has gone up to $1.14, and Moban crude has gone up to 0.98 cents. And when you open the chart here, then you see that the price is still bullish. It's loading. Yeah. As you open the chart here, you see that the price of oil is very much bullish. It has been bullish since 1, 2, 3, 4, 5, 6. About 6 days now, the price has been bullish. And if you see it from here, that the price is bullish. Now, exactly this price has gone up bullish now. It could be as a result of inventory supply from API last night, which is minus 2 million barrels, and it's bigger than expectation. Then the price go up. Let me even know whether there's a news on it. So you can also see the news on it immediately. If you check here, let me check if there's a news that supported the rising fuel drive oil bullish. They say rising fuel demand is driving bullish sentiment in oil market. Let me check whether the splash news on the EIA. Let me check. US benefit in Saudi Arabia. What next? Okay, probably they did not flash the news on the API report. But they will definitely flash the news on the EIA. Why? Because the EIA is the regulatory body for the federal government in the United States. So their news has more impact. The people pay attention to it more than API. API is within the America, but sometimes their news. Oh, look at it. Inventory of US crude oil report slipped 15 hours ago. So this is their report. It came 16 hours ago, which is obviously last night. Now, okay, I'm trying to click on it. It's loading. So now, exactly by 3:30 p.m., this market this oil, the inventory report will come out again. If the inventory report from API come out and shows more, let's say, show less supply, it may keep pushing the price of oil above $80, even break this particular, this particular resistance here, may push the price up to 80 or 82. Then believe me, unless if the result came out to be the other way around. That's why every Wednesday we stay close to our curve and place trade using demand and supply matrix on oil. And that's also one of the major days that oil price move. Oil price move more on Wednesdays. Then on other weekdays, it moves because of other economic factors like news. When we hear about escalation in the Middle East, pay attention on oil price, it may go up. Then if you hear about natural disaster on those oil producing zones, pay attention to the oil price, then it may go up. Then concerning the regulation, if you check the OPEC benchmark, I think it's $62 per barrel. Saudi Arabia said, Nigeria is 62, I think Saudi Arabia is 92, I think 92 oil price per barrel. So now they want to maintain within that same price. So if oil, they have a benchmark of, I think 62, this one is 92, based on the budget planning. So within this particular space of oil is good for them. Sometimes if oil hits 90 is a higher price, then if you drop to 70, 75, or is 72, it's become a lower price, and anything can happen in the oil. If you're an oil trader, focus on oil and understand the politics in oil, you'll be making more consistent profit, more than forest traders. Although the same way too, if you're a forest trader, understand it more, can make more money. However, the best way to understand this is to focus on one or two instruments. Don't just be everywhere. Focus on one or two areas and master that area. Do you understand what I'm saying? Now, I don't know if you have a question so that we can go on break and come back and check the report and place our first trade. Any question?
Yes, sir. I have a question. So, sir, now we are expecting a report by 3:30. So like this, like every Wednesdays, we won't place a trade. We'll just hold on until the news for 3:30 comes out. We'll place a trade. Is that how it works? You can't buy or you can't sell till after 3:30.
No, that's not how it works, unless you want to trade that way. We're talking about using support, demand and supply to trade.
Okay.
So now, when there's stability in the market, it means there's no political interference. The price will be stable. Demand and supply will play a long role. Then when there's instability in the market may even rise even on Sunday night. Like there was a time there was an attack. I think Israel attack, is it Hamas? The attack happened on weekend. Sunday night, the oil price closed, open at a higher price, and it was on news. Market jumped, and that's market, or the New York stock market opened, the oil price jumped because of that attack. That is what I would call natural disaster. Yeah, because politics and natural disaster look similar, especially when it comes to war. Unless if it's normal natural disaster like like tsunami and stuff like that. War could be, of course, influenced by politics, but sometimes it can be classified as natural disaster because of that attack. Now, there was a day we made profit on oil. That day I was actually selling. No, I was buying, then the price of oil came down. I was losing money. So I just leave it. Went to the mall to do some shopping. Later, only for me to come back, see huge profit after a while. And I check on the news because that day wasn't on Wednesday, it was on normal days. I heard that the Israeli Prime Minister disagreed on the peace deal with Hamas.
Okay.
Yeah, so remember there was a peace deal. I saw it. The oil price keep falling because of they agreed. Only for me to just see that the price has gone up. I checked it. They said the man, as their delegate went back to Israel and report, the man disagreed. Then the price reversed. So had even he accepted, the price could have fallen more because the price was going up because of the tension. And the man said, no, I'm not going to agree. I said, oh, I mean, this tension is still high. Then the price of oil go up. That news now is not demand and supply, it's politics related. Like those tensions. That's why you can be checking a lot of these three factors influences the market more.
Mm.
Do you understand now? So now,
Yes.
for me, I cash out. I even thank God for the man not to agree. As he refused. So otherwise, assuming that man agreed, I can keep losing money. I was not losing money because of demand. I was losing money because of, since the tension has reduced, that's a political related thing that's causing the price to come down. Then I will be waiting for another event to come and push it up. Do you understand now? So there's always event that can help you to predict where it's going.
Okay.
Yeah.
Hello,
So
sir.
sentiment plays a little role in the oil because of the oil is industry, that oil market is an industry that's controlled by big guys. So there is nothing happen accidental. They don't speculate, they already know. Like now, during the Russian and invasion to Ukraine, the oil price went up, but something happened in the middle when they keep sanctioning Russia and still buying and keep buying oil and keep buying Russian oil. I don't understand. So somebody's on sanction and you're still buying the oil. So then later, when the EU now say that they want to put oil price, they want to put benchmark of Russian oil at 62 euro. That's the price they're buying it, even though the price is above. So now that particular incident also affected the price more. But assuming they want to be buying at the current market price or whatever, it could keep pushing the price to a particular direction. So there are small things that affect it. Now, why we told our students to pay more closer attention on oil price for a long time this year was because of number of demand we receive from New York Stock Exchange. contract open there is about 50 million. And the people who trade on exchange controls the trade online. Because the price moves first on the exchange, not with the it is the main commodity dealer that controls the price more than we derivative dealers. As I said, who moved the price first? It is them that moved the price first. Then we follow up because we're not taking delivery. So as the contract was open, that was open on the New York Stock Exchange is 50 million, which was closed on May. I don't know this is June, so I don't know the report of the recent contract. How many volume of contract is open? We say most likely the price of oil may maintain high price throughout the year for people who invest at a long time. However, that doesn't mean that there shouldn't be short sell. Like me, I like to sell and buy because it's easier for oil price to fall than to rise.
Okay.
Yeah. This is observation. It's not something you can read on. It's easier to fall than to rise. It can struggle to rise, fall. It can use 2 or 3 days and fall for the whole gain. Again, like in a month. So it can be rising. Anytime you want to fall, it can just boom, as if, you know what I mean? It will just fall straight.
Okay.
Yes.
While it takes time to appreciate.
Yes. It can struggle to rise, but anytime sell is happening, oh my God, like sell.
Okay, sir. I want to ask a clarification. This crude oil, the one that has CL, that's light crude, right?
Yes, that's light crude. Some broker
and the WTI, are they the same?
Yeah. WTI is Western Texas Intermediate. So it's traded at Chicago Mercantile Exchange.
Okay.
I told you at the beginning of our class now, major exchange, Seaboard, New York Exchange, ICE, and the CME. All these exchanges trade oil. So each of their oil has a name they listed on it.
Okay.
Yeah, that's where the price of this is coming from. Like the broker will use our execution are executed directly from the exchange. Yeah, our execution done from exchange direct, not from OTC.
Okay.
Yeah.
Okay, it's clear. I'm clear.
So any question, because when we come back now, we will check what is the outcome and we place our first trade on oil using that outcome. Yes.
Okay, sir. Let me ask this one more question. Let's assume that there's data release now. Let's assume that the actual now is minus 412K per barrel, something like that. Let me put it that way. And they forecasted something like minus 125. Does it mean that the price will decrease in value, something like that?
No, price will go up in value. He said if the actual is minus 4 and the forecasted minus 2, right?
They forecasted minus 125, something like that, and the actual is minus 140, something like that.
Yes, so it shows more or lesser supply and it will trigger more demand. So it means that it's better than what they expected.
Okay.
Yes. So look at the practical side of it. Here on the, I think you can see my screen. Here,
yes, I can see.
They were expecting that minus 1.750 would be released, but what was minus 2.4. Now, what are you seeing in the market going on?
The price is going up, yeah.
Yeah, so we use them to know. We use this to know. So when I want to try, I try to know what is happening this week. Are there more supply? Because I can see that it can affect the market. Are there more distance? So if somebody asks me to analyze, I check those factors.
Okay.
Yes. Then now, the second factor I check, is there any news coming up? Like, is there any wahala in somewhere? Are they talking about somebody now? Or, you know what I mean? Or maybe the Red Sea, is it at peace? Or they have divided it again? All these things. So from there, I'll be able to know, okay, there's a crisis. Or there's a crisis. Okay, crisis will push it up more. I will not say, are you sure this will come down? This thing that's going up like this thing they're talking about like this. Then again, now I will not check demand and support and resistance. For example, if market is low, and there is less supply, oh my God, I will buy peak. And if the market price is high and there is high supply, oh my God, I will sell peak. Do you know why? Based on laws.
Come again.
If the market price is low If market price is very low and there is a lesser supply, I will buy quick.
Okay.
Then if
Okay.
market price is high and there is a higher supply, I will sell quick.
Mm-hmm. Okay.
Yeah, because once there's a higher price, supply may be triggered. People want to sell more. That's also why it's regulated. So that if price of oil is high, people will not go and produce more. For example, they give Nigeria 2.2 million barrels to produce per day, so that they don't go and overproduce. I think one of them was asking us to leave the OPEC so that we can produce more and sell more. You know, you know how it was. If the price is high, produce and sell quick and save the economy. They not ask you to produce only too. So people want to leave it so that they can produce more, say high at that price. Now those things can trigger more supply, and then now the price will now fall. That's why it's regulated. Then when I see a good opportunity at a very good support or resistance level, it's a good for me. And now I've gotten two coherent factors. Do you understand? Like two factors I'm supporting my analysis with. Now the price is low, it's a support level. Two, there's a lesser demand, or maybe there's political factor already at that price. Then I will base my analysis on it and trade. Then and leave it. Just set up my limit and allow it. Basically, I don't use take profit. I've said that a lot. I'm not saying you should trade like me, because the way I trade is different from the way you trade. I don't have emotions. It's dead.
Yeah.
So you could,
No emotions for money. Money making.
now you could use those factors. That's what you should look out for. Don't trade like based on how you say the chart. No, analyze factors you use and use them to trade. Those will guide you. Like it can guide you. Even though when your factor fair, does not mean that you should change it, because it cannot work 100% for you all the time. But get a factor that work for you 70 to 80%. I don't know if I have a question. We need to go on break now. The way I'm seeing it, we will not have up to 1 hour break. This is 12. This is 14:20. I wanted to go on break on 14:15. How many minutes? Okay, we'll go on 30 minutes break. We'll come back.
Okay.
We'll come back and maybe 2:45 will be how many minutes? Let's assume 4:20. Then 4:30 is 10 minutes. 4:40 is 20 minutes. 4:45 is 25 minutes. Okay, we'll come back at the 4:50. Because
That's 250.
450.
4:50.
That's
250. 250. That's 10 minutes to 3. Because this report will come out by 3:30. So we have to have like 40 minutes. Assuming somebody want to fund the account, okay, I don't know, or want to set up anything. Then during this break, I'll be on our WhatsApp. You can WhatsApp me. I'll be on it, so I'll be maybe chatting you up. But make sure it's prompt one, so that in case you have anything you want to do, I can easily help you to do it before the break time is over. I think that would be fine. So I'm pausing the recording now. If I come back, I will continue from where it is. I think that would be fine.
Okay.
Okay.
Yes.
Yes.
See you by 2:50. Yeah.
Okay. Thank you.
Yeah. Yeah, I'm starting now. I got some good news. Somebody chatted me. I don't know if it's okay. It's not here. The person is not here. He chatted me. She's making a lot of money on the analysis yesterday. It has made more than $300. It's not here. It's not. I think it's Antonia. Yeah, I think. And if you check our new Instagram channel, I posted it there. It's a good one. I think it's Antonia. She's making almost like $300 something. So So basically, you have almost covered what you paid us for training. I think Linda is also making profit because she shared it with us.
So should I close my own?
Yeah, you can close it. They were asking me if you should close your thread.
Yes.
Let me. Yeah, if you want to close. Oh, I see. You shoot up as we were expecting. Okay, let me share something with you.
Yes. Exactly.
Okay.
Think him up. And the
There was a
GBP.
surge.
So then.
Yeah. Okay, there was a surge. Linda, you miss opportunity because of.
I swear. My phones. Yeah, I know. Yeah, I
No,
know.
because of doubt. You are afraid of the
Okay.
business. In the business, you don't need to be afraid. Look at what we are saying. I told you about here could be support level. Now, as we are talking, within 2 hours, price of euro move from here to this point.
Yes, I was even shocked.
So Linda made money. That is trading. I told you when we say that Linda, is it Antonio? I don't know. I'm so sorry. I give one of you a trading plan of 15%. Now,
Yes,
I told you sometimes that you can make 15% in one trade.
Yes,
So
yes.
assuming you are using there 15% now, you can see that you have made probably more than 2 months trade. So if you're a portfolio manager, you may not trade for more than 6 months, 2 months again, because you have met the target of the company. Do you understand? Yeah, now that's how trade is. Sometimes it's not a must that it must be every month. You can use one trade to cover all. So
should I close my euro?
If you want, you
should
can
I
close it. If you want, you can close it. But now, basically, this thing that's going on, this thing going on euro now is something. It's a breakout. It's a news.
Yeah,
There's something. Yes, it's a news. It's not just technical. Something should. And I told you that this gap. I told that this gap will cover.
Must be covered. Yes, it has covered it.
Yes. I told you. See this gap.
Yeah.
Now, that is what trading is all about. Ability to identify opportunities, not trading every day.
Yes.
Do you understand? Yeah, ability to identify opportunities. That's what trading is all about. So I keep telling you that what you'll be doing with us for the next 6 months, for those on 6 months, and this time next 1 month, is to help you identify where you can easily make profit. Not necessarily buying and selling and you're losing money. People are trading every day, but they're not making much profit like others. Now, the same thing happened on Bitempa. Look at it now. So it has shoot up. It has broken the support. So the resistance here. So that's why. So Linda, assuming you put big money, you could have been making more money too than others. Then you see this JPY. We talk about sell here. Then you see that it has dropped further. Of course, these are the 3 major currencies that we analyze. Then we come back to the market of the day, which is oil. Oil will come out in the next 30 minutes. That is the when the report will come out. So if you want to close it, you can close it if you want. But if you follow our analysis, it has not formed a resistance. It's still good, but you have power, you have right to close it. So it will add to your capital. Why did I say so? You trade based on target and based on plan. It will help you. So if you meet your plan, you don't need to bother much again. You can leave the market. You can do other things. You can look for another opportunity. But yeah, I know that it's like blood money. It's like blood commitment. It will push you. If you make the first one, you want to push.
Yes, to get more.
I know. Yes, I know. I wouldn't call it greed.
It's investment. It's opportunity.
Sorry, I refuse to my statement there.
Okay.
It's an opportunity.
I won't call it greedy because of it has to be greedy when people are afraid, and afraid when people are greedy. And 2 things move the market: greed and fear.
Yes, no, you can't do business if you're not greedy.
Yeah, greed and fear. So for me, when I see good opportunity, I strike. I don't just trade. I strike. I don't care because that money is there for investment. If I'm not living in my own house, I paid my house for the year, for example. I don't ever, so money for investment, I put it on investment and different types of investment. You may be able to do the course with us. but those of us who are on 6 months, but it's not my course. Somebody is going to teach you on that one. Then what I'm saying is this: money for investment on derivative investment or high risk investment need to be approached on that capacity. In the sense that since I know that I'm coming here to make big money, I'm not coming here to hedge. I now look for opportunities that can make me get that money. It's as simple as that. People trade this business because they want to make big money. And they go into real estate and other things because they want to be conservative. That's the truth. And like real estate, treasury bill, and I think bond, those ones, those government bond investment, they want to be conservative. That is how it is. Unless if you do a mistake, you carry money, you're supposed to invest in treasury bill, or you're supposed to use buy house and put it here. That means you're making a lot of investment mistake. You need to know where you can diversify different portfolios. Most people come in here to pay debt. They just want to look for opportunities, strike it, and withdraw and pay their debt. Because they know that they can make big money in the market. And that's why the market is big, is huge, is more volatile because of this thing. So now, let me go back to the market. I hope you can see my screen. I'm happy for you guys. I think I'm meeting on my target. I'm taking the risk to teach you, taking the risk to make sure you
Thank you, sir.
Thank you.
Thank you.
Yeah. So by exactly 30 minutes, this market will come out here. Yeah. So now, what can you see here now? So now you see that they have removed the previous report. What is here now is now telling you that in the next 1,578 seconds, new report will come out. That previous one I was showing you, I think that was this one, is gone. So if I refresh this page now, we're not going to see this thing again because it has been removed. So exactly by 3:30, they will release another report. So that's why I said, assuming you have a position on oil, you have to close all of them. Somebody was chatting me. He said he's struggling to know how to trade. I don't know if you are back. If you are back, please indicate yourself. So we use the opportunity and show you how to place a trade. We wouldn't mind asking you to share your screen. So that you need to learn it now. I don't know whether you paid off for 1 month or 6 months. If it's 1 month, you didn't learn all these things. Your money is gone.
Yes,
yeah. So what's your name, please? So I will address you as your name. By your name, sorry. What's your name? Okay, Pius. Okay, Pius. So, Mr. Pius, if you can share your screen, you can share your screen here while we are waiting for the report to be out. So I can show you how to place trade. But if you don't mind, if you mind your capital and everything, or every other thing, no problem. We can have a separate session with you and show you. I wanted to show you so that you can do it by yourself.
Yes, sir. I would do. Show me here, sir, so that I will know how to do it very well.
I should make you the host?
Sir?
So I should make you the host to share your screen, right?
Yes, sir.
Okay, so you are not the host, so share your screen. Please take note how to place the thread. I have my thread. Let me check my thread now.
Excuse me, sir. I'm using 2 different devices. So I may not be.
What was your name on that one? Because you know that it's against our rules to use your 2 devices.
No, I'm not online. That's the one I logged in the broker and everything, but your classes is in another device.
Okay, so let me say you can't share it, right?
Yes.
Okay, no problem. I will practicalize it here when the market is ripe, or I can use demo to show you now.
Okay.
But it's not really the same platform because I'm using desktop. You're probably using phone, but it's the same thing. So if you can see where to buy and sell, then I will show you other stuff that you will need. I don't know if anybody's struggling like that. About 7 people with us here. I don't know how many people are trading. If you're trading, just let me know, please. I know two people who are trading, other people who are not trading, just let me know. So we'll see how far we can help.
Okay, if I got you correctly, you said you want to carry out a practical on how to buy oil.
Yeah. We want to carry out the practical, and we are doing that in the next 20 minutes. Why? Because the report is coming out exactly by that time, and we'll be able to buy the oil.
Okay,
I wanted to
if he's
give
unable to
you.
share,
Sorry.
if he's unable to share, do you want to use mine to show?
Which market are we going to buy on your own? But have you closed those positions?
Yes, I've closed them.
Okay, let me check the market we can use to show you. The oil market is very good. Even Australia is going up today. Okay, I will show you something. Let me see. I'm trying to get a market we can use.
Okay.
So that it will be live traders, because you're on live, it's not demo. So that you make
I'm
profit
actually
on it.
I'm currently trading the AUD.
Okay, the AUD weekly. Are you buying it?
No, I'm selling.
That means you'll be losing money. For us, you ought not to have buy. If you ought not to have sell it if you follow our analysis. Again, let me address issue. Somebody sent me, I think it was Ogona, that he asked me, how do I know when to buy and when to sell?
Yes, I did.
Yeah, I don't know if I've answered that question before. Now, let me show you something, when to buy and when to sell. Using, okay. Can you see my screen now? Okay, I've not reclaimed my host, sorry. Let me reclaim my host. Okay, I thought I was sharing. So now, Antonia, which market are you specializing now? Euro is still valid.
Yeah,
It's
one
still
of my
valid.
accounts, Euro is still valid, but I closed the other two. I have two other accounts. I would have left them.
Or what you do, modify Euro. Put the stop loss above your entry. You know what I mean? So, for example, you can put the stop loss here if you don't want to close it. You can put the stop
Okay.
loss. I don't know the price you bought anyway. You can put the stop loss maybe around within this price, so that it will be above your entry. It's called trending stop. So it can also be used automatically. That's how you can put it on your MT4. It will be updating, following your trend automatically. The more it goes in your direction, the more the stop loss is adjusted. So if the market should reverse back, it will cut somewhere, and it will cut
Okay,
on
so that
profit.
I don't lose. Yeah. I will
Yeah.
not lose what I've gained.
Yes. Yeah. I don't
That's
know,
what
where
I'm
am I?
doing. It's very serious.
Okay.
I'm using this algo system. I don't understand how, the one is Ava trade that you showed me how to
Okay.
use. This algo is different. I'm looking
Okay.
for.
Let me give you an instance on stop loss. Let me make you the host now. I think, are you Tony? Huh?
Yes.
Okay. Yeah, the host. Please close anything that you may consider personal.
Okay. I want to do it with my phone. Let me log on my phone. The phone is easier to share.
Are you connected on your phone?
No, I want to connect to my phone, but my laptop will still be on. Or should I disconnect one?
Okay, no problem. You can connect on your phone and
Yeah,
share.
connecting on my phone. Phone is easier for me to share. So it will still be the same thing. It's
No,
coming up.
I would prefer if you use phone because of Mr. Pius. Mr. Pius
Yeah.
is on phone. So if you use phone, it will be easier for him now to see.
Yes, I'm using phone. I'm logging on
Yes.
my phone.
So it will be easier for him to see how it works because of different platform have different interface. If you are using
Yes.
web version, is different. Yeah.
Okay. Okay, for this practical, which account should I use? The account that has the highest balance, or what?
Yeah, if you are trading oil, please put big money.
Yes.
I just want to beg you, because the margin is not the same. Yeah, 0.01. I give you 1 cent in commodity in currency. It give you 10 cents in oil. Do you understand? So it's not really the same. So I imagine if you have $100 and you open it, you open an account on 10 cents. It's big. It's a big one. You can make big money. You can lose more.
It's coming off.
Okay.
Still connect.
Okay. So
host has joined you. Let them know. I think allow me in. Yeah, it's up now.
okay. Are you on this one call?
Yeah, can I?
You need to disconnect one device because it is echoing.
Yeah, I reduced the volume.
So you are this Antonia Simeon?
Yes.
Okay, so you are the host now.
Okay. I'm opening the account on the phone. I will start sharing before the account comes up, so that when it comes up, you just see it.
Okay.
Okay, it's up.
Okay, yeah.
I don't think this is the. Should go to the charts. Where do I go?
This is unable to connect to server. What's that? But it's connected.
I don't know. Yeah, that's this algo system. They're always having issues.
But it's connected.
It's connected, but
it could be a network. Mr. Pius, just take note now because of this class will help you. Let's say you want to place trade on Britain pound, because Britain pound has broken resistance. Why are you shaking it?
No, it's not allowing me to. I can't click on anything, so I want to log in again. That's the challenge.
Okay.
It's very slow. Ava is faster.
Okay, on the app.
Yeah, on the app. On the app, it's very slow. You will open it again and again before you can. It keeps logging out. So I'm signing in again.
Mr. What's his name? Pius, are you experiencing the same thing?
Exactly, sir.
It's better on the laptop.
Okay, it's fast on the laptop.
Yeah, just that my laptop, I've not, I don't know, I've not sorted out the issue with sharing. I've been unable to share with it. I'll need to take it somewhere. Maybe I'll check it. It's better on the laptop, on the phone. It's not okay. The account.
Just try to log in again.
But can you not see it on the laptop? I can see it now. Hold on.
But I was curious about the phone side because Mr. Joseph is using phone.
So how did
so that he will see how the phone version will work.
Okay, what I opened on my phone is still showing on the laptop, my laptop here. So I'm sure you'll be able to see it.
Okay, maybe.
You see, it's not logging on. It's taking forever.
Maybe.
Okay, please hold on. Okay, let me click this. Can you see this?
Let me check.
Can you see what I'm displaying?
I can see your screen, but it has not logged in and show us the chat. It was showing us before.
Okay. Okay, but let me try doing it here on the system. think it can work today.
Okay.
Host disable. Okay, you disabled me on the laptop.
Unless I enabled you on it.
Try it. I think it will work here. Because I can view what you are saying on the phone, on the laptop. It's not logging on. It's so difficult to come on. But it's up on my second phone. But on this one, it's not coming. Okay.
It's open. It's open. Oh, you're getting $420.
Yes,
here.
now I've not ended the. I've not ended it. And I opened just one position.
Why is your balance decrease? How much did you fund? Okay, your history. You lost $15 before.
Yeah, those one trade.
Go
like
to your
that.
history again. Go to your history again. But it's buying now. We buy.
I don't know.
We bought. Why did you close it?
I don't know. Why am I in debit? Why am I in negative?
No, this is your history. It's on history. So you had a buy, which we analyze, by, and you close it, you should have closed it.
It was in debit. It was doing minus. I was not sure. I now closed it.
No, I think we thought we would make the analysis. What happened? You have stopped sharing. Okay.
No, I've stopped sharing.
Yes. I wanted to show you how we can close the thread and open thread.
Okay. Let me go back there. Is the app closed?
That's exactly what I'm experiencing too.
It's not funny there. Why is it
I mean
showing?
that kind of it to close, or it does not really.
Closed. Let me see. Enable me on the laptop. Let me try it here. Here is better.
What's the name on laptop? Is it Tonia?
Antonia Simeon. Yeah.
Sorry. So you are not the host.
Okay.
No, I have two names here, Antonia.
Antonia. And because my phone and my laptop is there. But you have done it. Also share audio. Problem is this one. You know, I struggled with this one the other time. Can you see?
It's not coming up. Let me see.
I'll put it. Chrome. It's like Chrome cannot share. You can't share your screen on Chrome.
No, you can share. I'm actually using Chrome. Okay.
Can you see?
No?
Can you see it?
No, it's not coming up.
It's showing here. It's just that it keeps logging out on the phone. The phone came up, but it will log out. Okay, the phone is up again. Switch it back to the phone. The phone is up. Should I close this trade? Keeps going up and down.
If you have made profit, you can close it.
Okay. So my phone is up. Yeah, the phone is working now. Let me disconnect this. Let me cancel this Zoom so that I use the phone for the Zoom. I can share through the phone now.
Yeah. You're the host on your phone now.
Okay. All right. Can you see?
Yeah. I can see your screen now.
Okay.
Okay. Yeah. Perfect. So now, you log yourself out.
It's not me. Okay. You see it. It's the
maybe because it's network IP that probably it's network IP that caused that and that login and log out.
Ah,
or some settings. Yeah, I know how that will work. It could be some settings because mine doesn't do like that.
oh, really? That is
It's
my
network
phone.
IP. No, network IP, not just your phone. It's
Mm.
IP.
Excuse sir.
Okay.
It seems when her account logs in, my own will get locked out. And when my own get locked in, her own gets locked out.
So maybe you leave your own and let's
Are you
use.
guys are you using the same IP?
Because anytime she's complaining that her own is up, when I'm sitting on the screen, my own will go up.
Yeah, when your own is up, my own go up. Okay, it's like,
Yeah.
okay, now it's up again. Can you see? So
Yes,
Yeah.
perfect. I can see now.
Let me close this trade. I don't even know how to close this one. How do I close this
Click
one?
click on order under.
Okay, order.
Yes.
Okay.
So you have about sell on Canada as we analyze. You have buy on a Britain pound as we analyze. Then you have to buy. So
Yeah.
that's why you are cashing out. So
Yeah.
now if you want to close it, of course, you see close all. All of them will close at the same time. Or if you want to close it one by one, you see the cancel sign on each of them. Then you can close it.
Yeah,
So
let's cancel it.
I'm seeing edit. I don't know what you can edit. That thing is edit. That thing that has a pen on it.
Yes,
It could be
please.
to it could be it could be to put stop loss. Okay, I thought it's to maybe take some of the profit. Some platform can allow you to take some profit and leave some. You know what I mean? Now on this modifier now, you can modify and take profit above the entry level. Sorry, a stop loss above the entry level. Assuming it doesn't want to close it. But if you want, you can just click on close all. Then it will all close.
I have to go back and check the entry level. I don't want to close the market because I checked on daily. Even by the end of today, it's still on green. It's still going up. So,
No,
but
I mean,
don't really.
what I mean is this: you can modify it.
So, but I have to pick. I have to check and know the next. As in what number do I put? See USD card. Just entered USD card this afternoon.
Now go on chart.
Okay.
Then okay, sorry. Go on market.
Okay.
Then select Britain pound USD. Just tap on it.
Yeah.
Yeah. Now look at their market here. So basically, okay, go on that 30 minutes on the time frame, that 30M. Change it to 1 day. Yeah, like 1 day.
Yeah.
So now you see that it has broken the resistance level. So you can put your stop loss at 1.28 thousand.
1.28.
Let me check the price you bought. It's not showing me the price you bought.
It's not. It doesn't show this particular one.
No,
it
it will
showed
show.
on the other side. I think she bought at 1.27 something.
Okay.
Yes.
Go back to your position.
Click on order or order.
Okay.
Yes,
Okay,
she bought at
showing here.
1.27302.
And okay, and the second one at 1.414.
27143.
Yes.
Because this is 20
So
lots, that's why it's higher. This is 10,
so
but that's
Yes.
1.27302. You're having a call. 1.27302, and its market is around 1.2. What's the current price? 1.28. So now you could put your go back to chart.
Oh
If you
shit,
can log
you
it out.
see?
No, that's something you said. It doesn't keep you logged in for a long time. I know these things.
So
It doesn't keep you.
where should I go and remove it?
I can't just see something. I have to check. It doesn't keep you logged in for a long time. Yeah, if you log after a while,
On
it
my
logs you out.
phone. But the other apps are open.
Yeah, it depends on the settings.
I'm enjoying the Ava app more than this. That one is seamless, very easy to understand. it will take time to come up. I think they are unable to connect to my.
It's a server issue. Then it will
Yeah,
connect.
they are unable to connect all the time to this server. Maybe I should change the. I have two Wi-Fi.
No. It's not sure. Okay. Maybe if you want to
Let
change
me change it to Excel. Maybe Excel will be stronger.
But I can only give you 2 minutes.
I want.
Because it's almost 3:30. Yeah.
Okay, let me refresh
So
it.
if it doesn't work
Excel
out,
could be better. I wanted to put, okay, it's there.
Yeah.
So I go back to the chat.
I told this is IP. So you can put a stop loss at 1.28 to 8,000 or to
8,500.
It's now 2,852. You can put a stop loss 1.28250 because it's 5 to 5 250. Yeah. So you click on order. You click on order.
1.28. Oh, 1.28250.
Yeah. So now you put a stop loss above your entry.
Let me click on the order and put.
You have only 1 minute.
It's hanging now. Is this see?
No problem.
This one is not my fault. It's the app.
It's network. It's internet IP. Now, yeah, click on that place. Then on the SL side, yes, 1.28 250.
250.
Yeah.
Okay.
Then you click on update.
Okay. So I don't need to put up take profit. Invalid TP or stop loss. It says it's invalid.
It shouldn't be invalid. The price 1.28. Yeah, the market is at 1.2 what? Market is about 1.2853. 285. So okay, put it to 1.28,000. Or 1.28100.
Like you want me to put it above it.
1.28.
Should it be higher than the current
price?
No.
It should be above your entry price.
Okay, sure. Above.
Because you bought low, the market. So I'm claiming the host now. I think Mr. Simeon have seen it, and Madam Antonia, just practice it more, then it will be able to enable. We are going back to live on on inventory. So we only have 17 seconds or 14 seconds now for the new report to come out. I think you can see my screen. Okay, I'm not sharing it. Let me share it. So we have 4 seconds. Look at it, 3 seconds, like 2 seconds. You see, 1 second. So now the internet is loading to give us the new inventory report. It's loading now. It's loading. Okay. It's error. Let me click on latest release, probably because I've kept it there for long. Yeah, it's out. Now it said increase by 3 million. Do you understand now? It's increased by 3 million. So on the chart now, you see that it has started dropping a bit. It was up. It started dropping a bit. So if you put it on the 4 hours, yeah, you could see it has started making a sharp drop because more supply occurred in the market this hour.
Yes.
So based on based on an analysis, what we were expecting was a shortage. Our 3.5 million has already been supplied. Do you guys understand the analysis, or is confusing?
Yes.
Yes, I can hear you.
Yeah. So now I think that's why the market started making a very sharp drop immediately the report is out. Probably it's beyond. Look at it; it has dropped massively. because of it's more than what we expected. They were expecting a shortage. Assuming, although it may still rise more, but it has caused a very big sharp drop. Immediately the market came out, the report came out. Because this is a sign of more supply, more than what we expected. It means there are more supply. So what we do on this note, assuming you want to trade on it using this law, someone voice is breaking. So now, assuming we want to trade on this note using this law, what we will do is to come here on oil, select our lot size, then we click sell. Then we put our stop loss at I'll put my stop loss above $82.
So should we do the same thing with you?
Yes.
Yeah.
Okay.
Yeah. Mm.
I'm not there.
$82. My SL should be $82. 82.03. Yeah. Mm.
Oh, there's a sharp drop. Oh.
It drops. I'm not to explain to you why it is dropping, and if you are trading on demand and supply level. So as the inventory came out, that's why the buying this was interrupted. But there's something I want to point out here. There's a small sign of who want to join us again? Tony.
Sorry, it's me. I want to place the trades on the phone and listen on the laptop.
So it has dropped. There's this thing that's my concern here. You see this thing here, this small thing here. This sign here.
God said hammer.
Yeah. That's my concern. So when we place a sell here is the previous like resistance. If you broke 80, that means it may go a little bit further. But if you didn't break it, we have to cash out. Like I'm getting $600 on it. It is $800. I don't know whether what's her name?
I've not done my own plan. I don't even know what to do. So.
Okay.
Yeah.
I don't know what I've been selling. Okay. I can give you access to share your screen if you don't mind.
Let me share. Let me share, sir.
What's the name? Linda, right?
Yes.
So this is how to trade life using demand and supply. Sometimes people will just be using it to trade only instead of making strong analysis.
Okay.
Okay. I hope you don't mind people seeing your balance.
Yeah, no, there's no problem.
Okay. Then you see the sentiment is on more on sell than the buy. And you on daily chart. So you look at it, the whole market just stumbled. You know that it was up now during our last hour, so it just stumbled. So as I said, why did it tumble? It was because of the news. And if it shows decrease, believe me, it will be more up. So now you can now go to buy, go to sell. Are you already selling? Why is you okay? Now I don't know how much you have. We've not done a proper analysis here. Your risk measure. Then go to lot size, change your lot size. You can use 0. Let's say use 30 cents. Yeah, use 30 cents. Use 0.03. No, that 0.3 there is $3 per movement. That thing you put there is $3 per movement. So use 30 cents, 0.3. So 0.03, sorry.
Should I sell? I've used 0.30.
No, 0.03. This is $3 is high.
Okay, 0.03.
Yes, then sell.
Okay.
So your margin is $25. Yeah, sell. Yeah, go on your portfolio. Let me check how much they charge you. Yes, so it's 30 cents as I can see. So you are getting now because it's dropping. You are getting about $1. Why are you selling Euro US? Did you analyze any sale on Euro? I'm seeing a sale there. Okay, that's the same oil.
No,
oh, sorry.
yeah, it's the same oil. I've closed everything.
Then you can go to yeah, that 3 dots there. Then take profit and whatever. You can this market is seriously dropping. You can put a stop loss maybe on price. So your cut is about 5,000 something. So let's take about 10% risk is 500. So let's take about maybe about 3% is maybe $300 risk on stop loss. What do you think? Is it okay by you?
$300 is high.
Okay. Maybe put a loss of what? Okay, just put what is okay for you. If you put $50, that would be 5%. If you put $100, that would be about maybe 1%. I don't know.
So which one can give me $100 loss? I'm trying to calculate. Is it one?
Just put the price in dollar. Come on, it's in dollar there.
Okay.
That side, yeah. So yeah, you are putting only $100 lost, like stop loss. Then you confirm. You place it on confirm.
Okay. So nothing on take profit, right?
If you want to take profit, then you go up. You can target maybe $300.
Okay.
So that's 1:3. Then you click on confirm.
I don't know what to put on mine.
You are getting $6. You don't need to. You need to know your risk. You're getting $8 here. Do you know why you're getting $8? Because of the loss side you put it small. If it's big,
It's
you get
small.
about $80.
Yeah.
Yeah. So
I
if you
know.
want to increase it,
I know.
if you want to increase it, it's up to you. Then you can also go on Brent if you want to place on Brent. This is a WTI.
Okay. Okay.
Miss Antonia, you say you don't know what to put.
Yeah.
You should know your risk. Like
Yeah,
what is okay by you. Yeah. Then if your money is not much, you can put like you can use the same parameter, or you can put maybe 0.01. Brent, are you on Brent now? Is that Brent? No, that's Canada. Just cancel it.
I'm trying.
On instrument, search for Brent. Go
With this,
to
right?
search. Yeah, Brent, BR. Brent.
Okay.
Yeah. Then click on, look at Brent there. You can use 0. Is that Brent as well? The Brent is at 82.
Yes. It's dropping.
It's not the same price we bought the other one.
No, that
Although
one, I think that one was 70 something.
okay, this is what price is this one? Click on it. Just click on the crude oil in there.
That one is 78.
Okay, 78. Yeah, okay, that means Brent is always higher than WTI. So click on Brent. You can, if you want to sell it, you can use if you use 0.05, 0.02, that would be 50 cents. 50 cents, okay.
Cash use was 0.01.
0.02. That's 50 cents.
So
your total.
sorry, sir.